Welcome to Macro Matters. This is our bi-weekly conversation where we talk about the macro events that matters for our members in the finance industry. We did take a break last week for Thanksgiving, but now we're back. Today is November 30th. It's a Tuesday, and I have with me, as last time, Rich Excell and Tony Zhang, both of the Gee School of College of Business at University of Illinois. So today, I thought we would talk about what else? The virus, COVID-19, and we do have a new variant now, the Omicron. We do know that they skipped a couple of letters in the alphabet, one for confusion reasons, one for political reasons. That's not what we're here to talk about today, but it's all fun to know. And we're not going to focus only on the new variant, I hope. It's the question of, there was for a long time the sense, right, of COVID not really mattering, but it's been the last couple of weeks or so, we've seen cases spiking. We see Germany, for example, being one place where if you look at the COVID rate just per millions of people and how many cases they're seeing, they are at an all-time high. Belgium is now at their all-time high. And we've seen similar trends in a lot of developed countries, not in the US as much, and not all over Europe either. At the same time, we keep seeing the trend, right, that the death rate is not going up much. The all-time high of death rates we're far away from that. So we are still in that situation. That seemed to have been the impetus for people to say the virus doesn't really matter anymore. We're not going to really see markets reacting too much of this. That was my impression from those people I talked to. Fortunately, I have two other people in the room here who can give other perspective. Maybe I was missing something all along. Now it matters again. At least we're seeing the motivation, the narrative that people come out with here about why markets have been going down. They went down last week. It's a shaky day today. So I will just start with asking the obvious question. Does this matter? And if so, why does it matter? Tony, you want to start?
Yeah, thank you, Lotta, and thank you, Rich, to have this opportunity to discuss one more time. When we come to this question is, does the new COVID variants, Omicron, matters? I think I'm not a medical expert, so I'm not offering the medical advice, but I'm trying to interpret it from a market perspective. Now, when we look at whether this matter, and apparently because the mutation has dramatically increased for this Omicron versus the previous variant Delta, apparently it could pose potential huge risk to the global health and simultaneously could actually hinder the global travel. So from that perspective, like we can see a lot of the industry might see the huge impact going forward for the next 1 month or two, right? Especially during this vacation or maybe kind of a vacation time. This period, holiday season, sometimes most of the people like to travel, like to fly from one place to another to meet their friend, to meet their family. Once we see the huge maybe emergence of such kind of a horrible or potentially variants with a potential to cause huge pandemic or spread, then people psychologically will have huge impact, and especially for those kind of people who want to travel. But for those people who had get used to the living situation over the past 2 years, like people working from home, people working remotely, and would that matter? Probably a little bit, right? So that's why from market perspective, if market really think this will be a big thing, market will respond heavily to this. That's what we saw maybe partially the story behind what happened on last Friday. And what we need to notice from last Friday was apparently Thanksgiving with low liquidity. Sometimes traditionally, there were few of market participants, right? And the news actually hit over the market during that day, and market might saw some kind of panic. I would like to hear what Richard think about this later on, but market saw some kind of panic. If this is the reason behind the market sell off from last Friday, and if it does matter, that we should not see the market rebounds from Monday. And if that's the case, now we did actually see market rebound yesterday nicely from the bottom and hold up, even though market seemed to react to other news happened today, but might not be the true story. So from market participants' perspective, a lot of people would feel that it might matter, but within an extent that could be contained. I think that's how I interpret from the point of view. What do you think, Rich?
Well, thanks, Tony, and thanks, Lotta, for having me. First of all, I wonder how we're supposed to pronounce this virus. Is it Omicron? Is it Omicron? I think we had Fauci yesterday saying Omnicron, which it definitely isn't that. But so we don't even know how to pronounce this virus, much less know what to do with this virus. So I think that is certainly adding to the problems. But you also have a lot of confusion, right? So, today the biggest panic was because the Moderna CEO was out kind of saying, don't really know what we're going to do about this and how long it's going to take to get another vaccine, but this one probably doesn't work. And so then if you hear that, then like, well, do I even bother to get the first vaccine if I haven't gotten the first vaccine? And I think, again, you look at the not just to pick on the US administration, but you look at even the European administrations, as you were saying, Lotta, and it's like we almost haven't learned anything in the last year. Like we don't know how to handle this. And so I think all of that is really getting people a little bit nervous. When we think about the COVID timeline, if you will, you go back to early 2020, we knew about COVID. We knew about COVID and how it was moving around the world. We saw things everywhere from China to cruise ships off Japan to Italy. COVID was there, but it didn't matter to the US until it came to the US. And then it mattered in a big way. And so then we had Delta. Delta happened in India first, and then it was going on in the UK. And then it didn't matter. It mattered more quickly. It happened in about a month. It happened in the US. And now what happens is the market's kind of learned a little bit, said, hey, the first time we see this, we know it's going to spread. And so we should shoot first and ask questions later, and let's get out of the way. And so I think what you really start to think about is the market positioning, right? When the market's nervous, it reduces its positions. And so I think in some ways, looking at the price action from last Friday and looking at the price action from today, you can start to really kind of get an understanding of what the market's tell is, if you will. I mean, think about it from a card playing perspective. You kind of get a sense of where people are a little bit over their skis in terms of positionings. And so what do we see? We saw the classic work from home lockdown stocks doing very well. We saw the flight to quality doing well, and we saw that kind of inflation/reflation asset classes that would do well get hurt particularly hard. And so I think what we've really seen is that people really were positioning probably for a continuation of a pretty decent economy. And that has been kind of put on hold right now, mostly because of positioning, because frankly, to me, it doesn't seem like we really know what to do yet, because we're not getting a lot of advice from everybody that should know what to do about what we should be doing. I think I might have confused you more than anything else.
Totally. As a classic Greek student in high school, I would say the easiest way, just Omicron, do that. Yeah, no extra letters for sure. That's really weird. It would have been fun though if they had used the Xi, which would, a lot of people would be pronouncing as chi, and that would be a lot more confusing, I think, than this one. At least it's a long word. I think that one thing you said about just a short-term view here today being Tuesday. It doesn't seem to me that it's a big reopen kind of against the reopening trade, that kind of theme. I know that the Friday, yes, you saw Peloton go up and you saw the airlines go down fine. If you're looking at something like NASDAQ, you'd think that NASDAQ would shoot again to the moon like we saw when we got the pandemic in the first place. We're not seeing that kind of outperforming and things like that. I kind of wonder what that means, what the expectations are about policy here, because what I suspect is that it wasn't that NASDAQ went up because, everybody's going to need a computer now. Maybe people will make a story about, well, people already got their computers, so you can't go up even if you get another lockdown. But I wonder to what extent it is an expectation about stimulus. economic stimulus are we going to get as much of it this time around? Are we going to get more as like a bandage to this? And I think a lot of the markets are trading on that is what I suspect.
Well, I mean, the biggest moves to me have been taking rate hikes out of the curve, right? We saw as many as 3 rate hikes priced into the short term out to the 2-year Fed funds rate ahead of Thanksgiving. And since then, we've had almost a full rate hike taken out. And so while the market was certainly more hawkish than what the Fed was saying, we've seen these rate hikes priced out of the market. And then that's had the effect of steepening the yield curve. It's probably helped a little bit some of the stocks like the financials. And I think, yeah, I mean, when I look at the NASDAQ, it hasn't shot to the moon because, you know, we aren't reopening yet, but it has certainly proven to be a flight to safety type of index relative to the small cap stocks or relative to the SPX or even relative to the rest of the world. So the large cap tech stocks is certainly where everyone seems to flock when they're a little bit nervous, but not a lot of it nervous. And so it seems like right now, from what I can gather, it seems like people are a little bit nervous, but not sure yet whether they should be really nervous.
Yeah, from my point of view, I actually agree with what Rich just said. And as what you just pointed out, that with regard to the policy or regulation taken by the government or the central bank, and it's important to realize that it would take time for the scientific community to figure out the scientific or medical implication of this new variants. And if I recall correctly, I think most of the vaccine makers say that it's going to take maybe a couple weeks or 2 to 3 weeks to really figure out the impact of this new variants and create or collect enough data to justify the severity of this new variants or Omicron, right? Now, I think what we can do is we just wait patiently for the next 2 to 3 weeks from scientific points of view. And from market point of view, it's very clear that we don't see this kind of positive correlation between multiple asset classes like bonds or equity. Now, equity actually went down. Now the bond actually went up. What that is telling us that apparently the liquidity actually or capital flow into the safety haven, like as what Rich just pointed out. Most of the time that it's an indication that market is unknown or it's uncertain about the implication. That's why it happened. So what that actually, if market overall feel the pressures from this new variants might cause a huge damage to the economy or to the whole market, that all of the assets should sell off. But that's not what we are seeing this time versus what we saw last time, or maybe the beginning of last year, right? When we started to see this emergence of pandemic. So I think with regard to the regulation point of view, it's going to take time. And it's very good that we see a strong economy underlying still continue. And the other great things that we are seeing is consumers continue to spend as strong as possible as what we have seen over the past few quarters. This actually is providing strong support for the overall economy.
Yeah,
So
it's always,
one thing I want to touch on there, and what you're saying, Tony, that we can't forget is that it's also, and we're kind of going into December here, right? The post-Thanksgiving season. So from an institutional investor seasonality bias, if you will, this is when people are scrambling to lock in their bonus for the year. And so that's why sometimes these near-term moves, it may seem crass to say that, but it's a very real bias that we see in the institutional community to want to lock in profits if they can when we start to see these moves towards the end of the year. Sorry, Lotta.
no, you're fine. I was thinking about when Tony's comment about the kind of movements when we're seeing with the bonds and the equities, it's always good to remember there's always a lot of other things happening. So we had like hawkish statement from Powell today, so that moved rates up, and markets have partly been pushed down by that. But going back to the broader picture of the virus here, the conundrum that I am sitting on, that I would like your perspectives on, is this, that we're seeing the popular response being lockdown. Of course, everybody wants vaccines. That's another story, but not much politicians can do about that. And that's what people seem to be worrying about. We're going to get more lockdowns, as well as other policy responses. It could be economic stimulus and all of that. And basically, and of course, you need stimulus because you're shutting down the economy because of response of the news of this virus. And at some point, so it seems that viruses are smart evolutionary, right? Viruses don't have a brain, I know that, but there's an evolutionary process that we're watching here, and mutations tend to go towards better functioning viruses. And if you're a virus, you don't want to kill your host. And the reason why we're seeing a more transmissible variant coming out is because the other guys who tried were not as transmissible, and they may have been, maybe as transmissible, but more deadly. And if they were more deadly, people tend to die, and therefore it only popped up in one group and disappeared, and we never heard about it. And so that should be the progression. There should be, like, the cost of getting and having COVID in your society goes down over time, and the cost of mitigating it goes up because it transmits more easily. And at some point, when those lines cross, you should say, okay, great. We did what we should have done when the virus didn't transmit as easily, but was more deadly. Now we're on the other side of this, we're done. My worry is that because this is the policy game, this is the kind of things that politicians feel like they need to do now to show that they care, that's what they're going to keep doing. And we always going to have a narrative that this is what they should do, even if it's completely out of the range of, we're going towards the virus being more like a flu, maybe. I know we're not there yet, but that's kind of where it's probably going. So just the kind of the outlook of, like, when might we see that? Might we see that? Or is it just going to be in this endless lockdown when everybody's looking at cases while the death rates are really low?
Well, I wouldn't ask you a question there. I mean, how do you think that this particular variant of the virus, like you said, this is going to probably be something, variations of this virus are going to be something that's going to be with us for a very long time. And I think you're giving policymakers way too much credit for being rational and explaining things the way you explain them. It's not been my experience that they are as rational. But I think, how should we be thinking about the potential stimulus? I mean, we have a very large budget reconciliation bill that's in front of the Senate now as they come back from holiday, that, we're talking about, spending that could surpass, if it's not sunsetted, $3 trillion. But is that something where it makes the odds of this less likely because we might need more actual stimulus and not a budget neutral bill? Or does it actually mean that they might have more votes to it because there might be this feeling that the economy is going to need the help in certain sectors? How do you think about that, Lotta?
Well, I would say that politicians are always most of politicians, I would assume, are politically rational, right? So, and politician, being a politician is all a game of hot potato, right? You just don't want to be in the seat when things get really hot and nasty. And as long as you don't think that's really close, you're going to want to spend more money. That's what I think that they want to do. And so are we close to that? There certainly are driving very straight in that direction where, and what I'm saying, that I should clarify, in the situation where it really is hard to justify spending, or impossible to spend while catching up with the inflation that you're creating while you're doing that. And of course, inflation being created from other restrictions on the economy, the supply chain situation, that's also a source of the inflation. So I think there's still, as long as there's some trust, people are not like outraged of like, you can't spend now because we can't afford to pay this. As long as they can keep up the narrative of, we're doing this for your own good and the virus is really bad and we're saving you from this thing by spending more money, I think that's what they want to do. And I don't think they're close enough so that anybody in office now necessarily needs to think that, oh, I should be careful because it might happen on my watch. I think there's still like faith in central banks. Like, will we see a new bazooka there? Will we see negative rates in the US? Completely on the cards, I would say, things like that. I think there's still things that we might see there, more liquidity in the system. And it's going to build out to a place where it just doesn't work anymore. I don't think we're there yet. I think there's still a way to go there.
Tony, what types of metrics do you look at from a quant perspective to try to understand what kind of path you think that this type of situation might play out? Do you look to history as any sort of guide, or are you looking for other sorts of things?
Definitely historical reading or historical pattern is a great starting point that from a quant perspective that we always focus on. If we compare now the story about what we are looking at the market right now, as one great interesting thing to look at is the trigger, as what you had pointed out, Rich. The trigger or catalyst would play a major point. And what from our perspective is, can we actually identify similar pattern of the narrative and with a similar trigger historically? If we could, that we are going to analyze the impact from historically points of view. That's a lot of the quant funds on the Wall Street are actually doing. Now, talking about the politics, I would actually like to point out from a bigger point of view, talking about politics with regard to how we actually treat the new COVID variants. It's more related to people arguing it's the inequality in the society. To be more specifically, it will be the inequality on vaccine. Keep in mind that the outbreak center of this new COVID variant, Omicron, is in South Africa. Particularly in that province, the vaccination rate is only about 28% versus almost over 50 or 60% in the developed country, right? Now, apparently, a lot of economists would argue with this inequality to the access of vaccine. Would this pandemic continue going on and on? This is something that we also look into. So whether the pandemic is going to create a long lasting impact over the economy, this is something very, very important. Rich.
No, I think that's a great point, Tony. And I think, there's the one thing when we talk about it, and we always want to ask whether macro matters. We always have these short-term perspectives and long-term perspectives, and as investors, we don't want to lose sight of what's really going on a longer-term basis and what the real true impacts are versus what are the near-term elements of what I would call noise, which kind of lends itself from investor positioning and seasonality.
Yeah, and I know that when this comes out, right, even if it takes 2 days, we're probably going to look pretty silly talking about the latest thing that we know about this new variant, the new variant, by the way. You can say new, so that was the letter that had to drop out, because then people are going to get confused later. If you say new, do you mean the new or the new previous one? But there's a lot of things having to do with this being concentrated in the province of where Johannesburg is in South Africa. There's a lot of uncertainty, obviously, that's coming out of that. But it kind of goes to show, I'm thinking, that the virus story is not over, and we're all coming into winter now, and at least in the northern parts of the world, where it gets really cold, the air gets really dry, and things just transmit much more, and people are inside more. If anybody follows the kind of mobility indices that they created for COVID, so these kind of things, like Google had their mobility index, right? And this is not to make it, advertise that company, but it started out something that seemed reasonable to do in the short run, but you see how much seasonality it is. And if I look at my home country of Sweden, you can't really say much when you're looking at park attendance, right, what the virus is doing. Like, oh, the virus is really pushing people out of parks now. Like, no, it's because it's the fall. Nobody goes to parks anymore. Like that's, and it basically just becomes a big graph of like when people go to parks. You know, if there are other components of this index, obviously as well, there's this recreational part and there's going to the grocery stores and all of that. But they break it down so you can kind of look at the different components there. So I think I would think that we're gonna go through a winter that might look scarily similar to the last one. Like we thought we kind of was over it, and we're kind of going into this similar story. People are being restricted in many ways. We do know that there are a lot of more activities going on. Probably the spending and all of that is gonna keep up. We do know there's wage pressure from the labor shortage and all of that. So we might see, I would think, another kind of virus winter in that way, where also virus news might matter. And I think that it was you, Tony, who said something really important, that is like, well, the markets know that if something happens in South Africa, it's going to happen here eventually. We figure that one out now. Before it was like a later reaction. Oh, let's see if they can stop it. And that it almost becomes comical, right, when they close down borders, as if it's going to stop it. Yes, they're going to say it's because we want to slow down the progress of how this is going to happen. But it seems to me to be a very blunt tool. But that's what we're seeing. We're seeing that as kind of, it looks like a free option because the politicians don't have to budget for it, but you can at the same time really squeeze the economy by isolating it, especially if you're a small country, right? So I think that's a little bit my expectation here. It's not really a fun one. I don't know if you have contrasting expectations to what we have in front of us here the next few months.
I would echo what you're saying. I think there's a couple things that to me kind of go into this. One is that there wasn't really much margin of safety in any of the riskier asset classes, right? We were at all-time highs in the S&P 500 and other US stocks. We are near all-time tights in terms of credit spreads. We certainly were at near all, if not at all-time lows in terms of the absolute level of corporate credit. We were at 8-year highs in the price of oil. So we didn't have a lot of margin of safety. And so whenever you have a riskier assets without a lot of margin of safety, and then you throw in a lot of potential uncertainty, that's usually ripe for the type of situation where you're going to get some sort of correction. I think when you talk about the potential response and what we should see from both from a weather standpoint, but from a politician standpoint, I mean, we are going into the US. We know as soon as we come back from the holiday season, it's going to be election season, right? We have midterm elections. So as much as we hate it, we can expect this thing to be politicized and not have a focus on science. And that's just going to add more negativity and uncertainty to the market. And so I think I would lean with you that there's probably a little bit more negative than positive in terms of how this should look to play out, certainly in the near term. But I wonder what Tony thinks, because he's probably going to be more objective than I am.
I think Rich and Lotta, both of you just tap on lots of interesting points, ranging from mobility, consumer spending, and also the secular trends. I would maybe provide a simple comment on each one of them. When we're talking about the mobility, we're talking about when we think about the airline industry and also maybe the tourism industry. Those industries apparently have been impacted negatively or dramatically over the past 2 years, right? And its recovery has been slowed down, especially with the new coming COVID variant. Apparently, this is no doubt for that. Now, coming to the second thing is about the consumer spending that Lotta just comment on. We are entering the winter season. Typically in winter season, people might like to travel, might like to take vacation. But this year, what we are going to see, or what we anticipate, is the travel and the tourism might slow down dramatically. And people are going to spend with their family at home, right? That's how we see that maybe the home purchasing or home goods purchasing might continue with the strength. This is what we have seen over the market as well. People might get used to stay at home, working from home remotely. This might be the long-lasting trend forever. It might not go away even maybe in year 2022, when the pandemic doesn't seem to be that bad or as bad as we are thinking about, that we are going to see that this trend will remain and stay there. It will not go away. Now, the third point of view is what's going to be the long-lasting impact over the central bank policy? Would they actually take any action to control this inflation caused by the shift from consumer spending, right? This has actually become a big question. If we look at how markets are actually thinking, we look at the real interest rate behind the treasury. The real interest rate behind the treasury with current high inflation point of view is still negative. It has been negative for almost over 20 months. This is a big, long time. It's actually much worse than what we have seen in year 2013, when actually central bank started the first taper tantrum. That's what people or investors are talking heavily recently. They try to compare the similarity what this time versus what happened in year 2013. That's what Richard said, that from data point of view or objective point of view. Now, we see a lot of similarity, but we also see lots of difference, right? And there wasn't any supply chain disruption as what we have seen last time. And there are now a lot of from inequality of economy. We don't see that. We don't see there are different opinions with regarding to the economy policy or even vaccine policy. Just so much change or so much difference right here that caused confusion and uncertainty to the investor. So bottom line is we just need to stay cautious. We just stay maybe vigilant, right? And Lotta.
Yeah, and did you have something, Rich?
No, I appreciate the vigilance there, Tony. You know, I love to stay vigilant.
I mean, I think that uncertainty is the key word, and it's not just uncertainty. You know, we started out talking about what's happening today in the markets, but it's very much is the realization that when economies are getting shut down in various ways, you're getting repercussions such as the supply chain story that we're seeing now that is happening way later, and we have like it's almost like. We were all kind of surprised. I was surprised of how resilient the market, the economy was to this in the beginning. And it's almost like when you take a punch, you know, to the jaw, right? Like, and you're surprised by how quickly you're on your feet and you're ready to keep fighting. But the recovery from that is like weeks and you're going to be hurting and you have to like get back to it. And that you might underestimate. And I feel like what we should all realize here is that whatever they're going to start doing now, we might see the results from in a couple of years' time. And with all the hopes that we all have about the supply chain issue resolving itself, I would certainly think that, well, if you keep doing what caused that issue of messing things up, like, yes, businesses are really agile, they figure things out, they were really quick to do that, they solve things just like that, but the connections of this very complex system that we have, which is the economy, do get rearranged. A lot of things are broken. And when you try to keep running on that treadmill, it just doesn't work as well anymore. And it's really going to be hard because it's so complex. It's always going to be hard to say what link in that chain is not going to be holding and be where there are kind of investment opportunities. Well, the price of lumber went up or the price of this went down. And that's where the obvious opportunities always going to be obvious in hindsight. I think it's going to be really hard to predict how this kind of system evolves itself from if we're going to see like new lockdowns now. I don't think it's going to be good and it's going to be really hard. So that's my view of thinking about the kind of uncertainty that you were hinting on. Tony. And with that, I hope that our audience had taken away a little bit of tidbits of how to think about this both. We want to touch both on the short and the long run. So unless you have any pressing things in your chest that just has to come out now, confessions to the world, I would say thank you so much for joining me this week, and we'll be back in a couple of weeks.
Thanks, Lotta.
Thank you, Lotta. Thank you, Rich.
Thanks.